Welcome back, traders. Today was choppy, but the kind of chop that rewards discipline. And if you stayed sharp, there were some serious wins to be had. In this video, we're going to break down everything you need to know about SPY heading into Wednesday. Buy levels, Fibonacci targets, support zones, market psychology, and yes, even some incredible results from our members. Let's dive in. If you find this helpful, drop a like and subscribe for more timely updates. Let's get into it. SPY finished today at 560.97, up plus 1.58. Price reclaimed the 5-day moving average at 562.36 and is now challenging the 20-day EMA at 568. More importantly, we bounced from the 0.236 Fibonacci level near 551.63 and closed above the 0.61T retracement from the recent swing leg. First, the technical landscape. Today, SPY gave us a textbook breakout above the falling wedge and pushed through the 0.382 Fibonacci level at 558.15, reclaiming key intraday moving averages. But it stalled out right at a confluence zone, the 0.5 retracement at 561.64, the 30-min pivot at 562.38, and the 200-day moving average sitting just above at 570.97. Above here, we've got three major upside targets: 565.13, 61.8% fib retracement, and a clear supply zone from last week's breakdown. 570.10, 78.6% fib and a magnet if the squeeze continues. 577.27, the ultimate short-term target from the wedge breakout pattern. But let's not get too ahead of ourselves yet, because today's rally came on relatively average volume, and the breadth indicator still hasn't confirmed the lows. That's something we're monitoring. Key buy zones to watch. Should we pull back tomorrow? I'm watching these areas closely. 553.84. That's the point. 236 fib retracement and the top of our green demand zone. 551.40. S2 and former resistance turned support. 548.35, where the reversal began on Monday. First touch buys only. Any drop into that 553 to 551 range could offer a solid bounce opportunity if buyers step in again like they did today. SPY broke out of the falling wedge pattern and reclaimed the 0.5 fib level at 561.64. That red zone we marked yesterday between 560.98 and 562.85 is now acting as a battleground. We're seeing an emerging ascending channel forming on the 30-min chart. As long as 557.76 holds, bulls have control short-term. Key intraday resistance sits at 565.13, fib 0.618 plus top of green zone, 570.10, fib 0.786 plus R1, 577.27, gap magnet. If you're going long, I'd personally reduce risk if we break below 549, the pivot low from the breakdown and where the recent bullish reversal originated. A break below there would invalidate the current bull structure. Upside stop loss for any shorts. Above 565.13, you don't want to stay in if we reclaim the 20-day and surge toward 570 plus. Psychology of this market. This kind of environment catches both bulls and bears leaning the wrong way. Yesterday's flush trapped shorts and today's slow grind upward left sidelined bulls frustrated. That's classic maximum frustration behavior. Remember, when SPY trades between two fib levels with overlapping pivots and trend lines, it tends to consolidate and fake out both sides before choosing a direction. Stay nimble and keep your bias flexible. Member wins and community shoutouts. I want to highlight a couple of big wins today from our amazing community. One longtime member messaged us to say he made 40% gains on our SPY calls today. Textbook execution. Another veteran trader shared that he booked $3,000 in profits on the Tesla reversal play we highlighted this morning. That's what it's all about, using the plan, managing risk, and executing without hesitation. If you're not in the group yet, check the link below and consider joining us. Buy the dip zones. Aggressive entry, 557.76, with stop under 556. Preferred entry, 553.84. 0.236 fib plus demand zone with stop under 551.40, swing entry 548.35 retest with stop under 546.86. Upside targets TP1 565, 13 TP2 570, 10 TP3 577, 27 gap close and potential reversal level. If price can close above 570, we likely squeeze to 577 plus quickly. On the flip side, if 553.84 breaks on volume, expect 549 and 541.98 to be tested. A lot of traders got chopped up yesterday, trying to short early or go long too soon. Today's recovery was textbook market maker behavior, fake breakdown, trap shorts, then ramp it. Patience paid off. Now that we've printed a higher low and reclaimed structure, the goal is to trade the reaction to levels, not just the levels themselves. If a level breaks, don't panic. Wait for confirmation or a fake out. So we're still in a tricky spot, but with clear structure emerging. Tomorrow could be an inside day. Watch for consolidation between 557 and 565. A break above or below that range should give us the next impulse move. Let me know in the comments, are you leaning long or short here? And what's your trade plan if we pop to 570? And if you want our real-time alerts, join the Patreon group below. Tomorrow could be an inside day. Don't force trades. Watch for digestion near 561, 562. If we consolidate here and break higher Wednesday, the move to 565 plus could come fast. If we reject this zone overnight, a pullback to 553 to 551 might offer the next high probability setup. Be patient, let the levels come to you, and keep doing what works, because it's working. If you're ready to trade smarter, check out the pinned comment for our private group where we post real-time levels, trade alerts, and daily prep, just like this. Thanks for watching. Drop a comment with your game plan and let's make it a strong week.